Today's Animal Spirits is brought to you by BlockFi. Ben and I did a podcast with Zach Prince, the CEO of BlockFi, on Monday. That was excellent. We haven't spoken to Zach since April. A lot has transpired since then, so I suggest you check that out. That was a good one.
It's like 14 years in crypto time. So we talked about how BlockFi calculates how they pay interest on stablecoins and Bitcoin and Ethereum and other types of crypto. We talked about how BlockFi lends out money to people that want to borrow against their crypto. We talked about the BlockFi credit card rewards, where they earn Bitcoin on their credit cards. So yes, excellent conversation with Zach. We get into some of the regulation on crypto. I thought this was a really good conversation. He's always excellent. So go to Animal Spirits feed from Monday. Check out our interview with BlockFi CEO Zach Prince.
Ben, last week we spoke about how difficult it was to beat the S&P 500. So my heart was warmed when I saw a story from Dan Rasmussen, who we've mentioned many times on the show, read his stuff every week for Ad Capital. So Dan Rasmussen raised $150 million during the crisis. Like he came, he saw, he conquered, right? That's what he did. He raised $150 million, made 85% net of fees, and sent the money packing back to his investors. I think Forbes said he pocketed $25 million. Good for him. Good for them. Next time.
Nailed the timing on this. Completely nailed it.
Nailed it. He wrote like 100, or they wrote like 100 something page report about investing during the crisis, got the money invested. The next time there is an opportunity for him to do this again, it's going to be a $500 million fund. Definitely. And he's going to be completely oversubscribed. So that was nice to see. It's been a while since you saw a story like that.
He was on a podcast with Jim O'Shaughnessy recently, and I loved one of the things he said. They're talking about, is this a bubble? People think it is. And he said, I have just given up trying to define what a bubble is. But when I'm in a crisis, everyone knows they're in a crisis, right? When there is a bubble or a bull market, no one really knows for sure if it's a bubble. But in a crisis, everyone knows you're in a crisis. He's like, I'd rather focus on those crisis periods and try to survive that rather than always trying to figure out what the next bubble is going to be. I really like that.
Yeah, it sounds obvious. I wish I thought of that, but good for him. Not that I could think of raising $150 million. I don't have the wherewithal to do that, but kudos to them. That's great.
No, you would have set up a short selling fund in April.
It's time to double down. Carnage is around the corner. Actually, can we just stick with that for 1 second? Somebody sent this to us. This is from a Permabear newsletter. It doesn't matter who it is. You know the name, but
the author doesn't matter. They all sound the same.
Yeah, but all right. But here's a quote. I'll preface it with this: these always sound intelligent, right? They always sound prudent. They always sound responsible. All right. So here's a quote: you need your portfolios to both participate and protect. Don't blindly buy index funds and assume they will recover as they did in the past. This next avalanche, it's always the next one. This next avalanche is going to change the nature of recoveries as other market forces and new technologies change what makes an investment succeed. I cannot stress that enough, Ben. Don't get caught in a buy and hold traditional 60-40 portfolio. He's telling you to dump your target date funds, Ben. Don't walk away from it, run away. Cautious optimism is always the long-term winner, always. But a buy and hold portfolio in today's world is neither cautious nor optimistic. Hope is not a strategy, Ben. That's precisely what a buy and hold portfolio is.
This could have been copy and pasted from 2011, 2012, 2013, right? You could have written this every year and someone would have been like, yeah, this person is amazing. They're so smart.
Gets it. They get it.
They're not wrong though. They're just early. And I mentioned to you last week, I've heard
it takes chutzpah to call for the next crisis right as we're coming out of the last one.
I mean, luckily, I think a lot of people have realized these Permabears, like, oh wait, they've been wrong for 10 years now. It's time to. We've more or less stopped listening to them. But I have noticed something in recent months, and I mentioned this to you last week. I've heard a few podcasts recently with noted Permabears, and I occasionally like to listen to them just to hear, like, what are these people actually? What is their view of the world? Every once in a while, they still say something intelligent, even though they're betting against mankind and humanity, basically. But a lot of them have made a subtle turn in the last, I'd say, 12 months. And that turn is going from Permabear that the markets are going to fall, and I hate the Fed, and the Fed is manipulating everything, and if it wasn't for the Fed, I would have been right, to I'm just going to focus on crypto now, because that's a space where the people who sound like gold bugs, we talked about this last week, have been right and made money, even though they sound a little out there with their macro takes.
That was like the getaway vehicle.
Yeah, so it's the get out of jail free card to go, oh, you know what? This is a system that's trying to take on the Fed. I'm going to hop on with these people because they've been making money.
How about this? I almost credit to those people because at least for goodness sakes, they're seeing an opportunity and sneaking out the back door, as opposed to staying with the tired Fed and manipulation. At least they're learning something and trying to see progress. So I have no problem with that.
It allows you to finally be bullish without admitting you were wrong for a decade. Just to go, see, there wasn't a system in place before. Now that this system's in place, now this is going to overtake the current financial system, and now I'm on the gravy train here.
I'm pretty okay with it.
Yeah, it's better. You're right. It's better than just staying permabear. I agree with that.
While we're on the topic of this Fed stuff, I wouldn't disagree with the sentiment that lower rates are driving people out onto the risk curve. Clearly, they are. Okay, if I could even get 2% in my Marcus account, believe you me, I would take it. I can't, so I am engaging in riskier activity.
Yeah, so you can't earn 2%, so you're investing in startup angel deals, right?
Well, ground floor is an example.
Yeah,
certainly that.
But it's funny when people equate like venture capital investing to low interest rates. Like those two things have nothing in common. People aren't investing in venture because they can't earn more on bonds.
I think mostly that's true, but I think that, listen, cheap money is cheap money. So I do think that it's made venture investing more crazy.
I mean, maybe that's like return chasing. I could see that aspect of it, but I think venture.
I agree. I don't think institutions are saying, oh, we can get 1.2% in a 10-year, or we could invest in venture capital. I don't think that's a conversation that's happening. But nevertheless, I think there's a huge impact. Okay, so anyhow, I agree that low rates are forcing people into risky behavior that they might not engage in if rates were at a different place. Okay, that's what it is. However, at the same time, there is still an enormous demand for fixed income, despite rates at 1.25%, wherever they are. So State Street has this report showing ETF flows, equity, fixed income, and fixed income flows are massive. Year to date, $124 billion.
Versus $391 billion for equities?
Yeah.
And this is probably one of the biggest spread between those two in a long time, too, because fixed income has seen more inflows over this whole bull market than stocks even.
So I feel like Jake shows this chart all the time. Flows into fixed income are bigger than flows into equities, are they not?
Yes, since 2009, since the recovery.
So how do we square that circle? And maybe both things can be true. Is that there's still a ton of demand for bonds because of demographics and other things, and simultaneously people are also taking more risk.
Yeah, here's the problem with markets. There are tons of different people at different stages of their investing life cycle that have different opinions, that have different risk profiles, all this stuff. Like, you have to take all this into account. And there could be a lot more people speculating, but also a lot of people in the market who are taking less risk because they're getting older and retiring. They don't have the human capital to make up for a bear market or whatever it is. They want to keep their money more stable.
And speaking of life cycles, Ben, I would not know it by looking at you that you turn 40 tomorrow. By the time this podcast comes out, you'll be 40, because your shirt, you're wearing like a bright red Hawaiian shirt. You look like Dyson. Remember in Jurassic Park? We got Dyson here.
Someone on YouTube commented, I wore a t-shirt a couple weeks ago, and they said, hey, I only tune into YouTube to see Ben's threads. Step up your game. So I figured birthday week, I had to step it up a little bit with a new
before we get to the 40 stuff, because I am curious what you're doing and some reflections if you have any. Are Hawaiian shirts like a thing now? Because I was with a friend this weekend and he told me that that he loves Hawaiian shirts, that they're very comfortable. Is that a thing, or is that just a coincidence that he wears them and you wear them?
No, they've been a thing for a few years now. They've made a comeback for sure.
A few years?
Yeah, you're a little behind on fashion. No offense. You're a little behind on fashion. The shorts thing you didn't know about, how people are in short shorts now. Hawaiian shirts.
But now I can't stop noticing short shorts everywhere I go now.
Yeah, Hawaiian shirts have been back in style for a few years. At first, people wore them ironically. And it's another one of those things like Guy Fieri. You start off liking something ironically, and then you go, wait, I actually kind of like this. I
like it. I like that shirt. You look good.
Party shirt. Yeah, so I had a little family get-together yesterday. We were talking. I remember when my dad turned 40, and his work gave him like a black cake with
How old are you when your dad turned 40?
He probably 6 or 7.
Okay.
He was in his early 30s when they had me. But they gave him black candles and black cake, but back then my dad looked like he was 40. People now are right. People look younger. I don't see. I'm of the thought process that after 21st birthday, birthdays are like irrelevant. They don't matter anymore. Like, I think here's a hot take for you: adults should no longer get presents or give presents to each other. Like when you become an adult,
I think that's everyone's on board with that. Who gives or gets presents anymore?
Okay, I feel like I still see adults that try. It's probably mostly like my wife and her friends that like still try to keep that stuff going. I feel like it's probably more on the women's side of things because they're more thoughtful than men. But yeah, I think like the whole present thing when you're an adult, if you can just anything in present range, you can just buy yourself. Why would you need to get or give it to someone else anyway? So I think after 21, the birthday thing is over. It's more just milestones. But so I don't really mind that much. But I tell you what, if you would have told me when I was in my 20s, like, are you going to feel like terrible about yourself at age 40 or not? I would have said like, oh, that's going to be awful. And now it's like, I don't really care. It doesn't like move the needle at all for me.
Would you say you feel old or you feel young? Like, man, I'm 40, but I still feel so young. Or are you like,
oh,
damn,
definitely
I feel
young.
old?
The only thing that makes me feel older is watching my kids grow up. Like seeing my kids get older, I feel like I am aging through them. But the only way I feel my age is through hangovers. If I get a hangover anymore, it takes 2 or 3, like a really bad one, stay out late. It takes 2 or 3 days to recover from. That's like the only way I feel my age.
Yeah. I was listening to the radio the other day in the car with Robin, and we were listening to the 90s station, and there was a...
Was it just on when you turned it on?
No, we put it on.
HGTV?
I like the,
okay.
Nope, I know where you're going with that. I actually like the 90s channel, but actually it was the 2000s channel, which I don't care for. I don't care for 2000s music. I prefer the 90s. It was the 2000s.
It's because the 90s is to us as the 60s were to our parents. The 90s is our 60s.
Well, so when I hear music, sometimes that makes me feel old. Like the Spin Doctors. That was in 93. It's like 35 years ago.
Yeah.
Wait, more than that. 36 years ago. Wait, my math can't be right.
Do your math.
Hang on. Wait, hold on.
You manage money for a living? Do the math.
No, I know this doesn't make sense, but I'm just saying.
I'm gonna let you get to it.
Please. In 93, I was 8 years old. Okay? Now I'm 36. So actually it's 28 years old.
There you go. Now we got it. Yes, no, there are certain things like that. But again, I feel like I'm going back to my dad turning 40. I feel like back then 40 seemed like a big, huge thing. These days, I feel like 40 doesn't mean nearly as much anymore. I don't think
like people... 40 is the new 30.
Yeah. And it's bizarre to me because I am happier now in my 40s, having settled down and having a family and being a much more boring person, like going out wise than I was in my 20s or 30s. And I'm completely fine with that. That's something when I was younger, I wouldn't have believed that like, you're just this boring person who's very routine oriented and you stay home a lot more. That you would still be way happier in life than you are when you used to do all that other stuff all the time.
Would you say that there are different types of stress as you progress? In your 20s, there's dating and career. In your 30s, maybe there's the stress of trying to have children, figure out the financial aspects of having children. And then I don't know what the stress is going to be in your 40s, but I guess you'll find out.
Well, I feel like all that stress has been moved from me, and it's almost like a positive and a negative to my children. Like, if I just want them to be happy and healthy and successful and all these things, and I worry more about like them finding it than myself at this point. Don't you feel that something like in the back of your head, there's always that nagging feeling of like, what if something really bad happens to one of them? That's like the different stress these days.
I try not to have those horror thoughts on a daily basis, but I guess they come and they go. You're not really trying to have those, but
no, yeah, it just happens. But yeah, I don't know.
All
So
right.
we finally took a few days off. My parents are watching the kids. This is the only work I'm doing for a few days is this podcast and sitting on the beach. And I have a 6-pack of Modelo in my fridge to read a book by the beach for the first time in a long time.
There you go. Well, happy birthday to you. What are you reading?
I started reading Recursion, which was the next suggestion from Andy Weir after the Project Hail Mary one. It hurts your head because it's actually a good thing about being 40 because it's all about memories. And there's a lot of neuroscience stuff in there about like what memories really are and how time exists on this weird plane and hurts your head. But I think it would be a good Christopher Nolan one.
All right, let's get to some speculation that went on this past week. So all of the sudden, NFT sales, and Ben, you're definitely too old for this, but I'll tell you what's going on anyway. NFT sales are scorching hot. Top 15 projects reached $100 million in sales, daily sales last week. We spoke about the Bored Apes. Now it's the Pudgy Penguins. FinTech Frank tweeted OpenSea volumes, and OpenSea is, I think, the first NFT platform. Volumes on June 1st, 3.6 million. Volume on August 8th, $71 million.
Here's my take on NFTs. And obviously people were quick to, spike the football in their grave and they thought they were dead after the first little run. I like it. Like, I think it's, this is not something that like gets me upset for people speculating on like some other things that kind of irk me. I think it's kind of, for lack of a better word, cute that these people are like, right? These people are all sort of seemingly happy. They're not like the hardcore crypto maximalists that say you have to like this or else. It's kind of like, this is kind of this thing. We know it's not like really serious, but we still like it, and this is our own little community. I also think this just shows there is so much money in crypto. There are so many rich people in crypto that they are just doing this to keep themselves content until something else comes along. Like eventually that consumer app or whatever that like allows them to unlock their crypto into something else is going to come along beyond NFTs, and I don't know what that could be. But eventually that's going to come along and it's going to just catch fire, right? Because this thing is obviously this, whatever people call them, JPEGs, and it's seemingly ridiculous. But I think when that really strong use case comes along, that just shows there's so much money that wants to do something in this space. So I think that NFTs are actually a really big positive for crypto.
What if this is all they want? Justin Paterno wrote a blog post. He said, maybe we're all stupid to be using this magic internet money to buy JPEGs, or maybe it's what the money was actually for all along.
Yeah, I think it's going to keep morphing, and that's possible. But
you know what's interesting? So NFTs, Packy wrote about this. NFTs are getting obviously a ton of attention. Kevin Roos wrote an article in the New York Times about buying the Pudgy Penguin, but barely anybody actually is partying. Packy wrote, even in the midst of NFT mania, only 109,000 people have bought an NFT on OpenSea. So there are other places to buy NFTs, but that's like basically zero people.
Are you starting to get the itch to go back into the NBA Top Shot?
Oh yeah. Top Shot? No, but I DM'd Justin Paterno. I was like, dude, why didn't he, you should have let me in before these things, went up 300x. I said, next time something goes up 1,000x, I want in.
All right. Good luck with that.
Just let me know.
If Instagram t-shirts take off, you are going to be the richest man in podcasting.
That's true. So speaking of that, Packy did this thing where he's like pooling money to buy a CryptoPunk. And so I was like, you know what? I want to support Packy. I want it. It looks like fun.
So you're going to do fractional shares to buy a CryptoPunk?
I like fun. Yeah, you're damn right. It is on this app, on this platform called PartyDAO. I think that's what it's called. PartyDAO. Yeah, PartyDAO. So I said, all right, let me get in on the action. I went to Coinbase to log in, and damn it, I got a new phone. Remember I told you a few weeks ago I got a new phone? So my Google Authenticator is specifically programmed for my old phone. I can't get in. I can't get into Coinbase.
You are such a boomer. You're like my parents with this stuff.
I can't get into Alto IRA. Dude, come on. You didn't know about this. You did not know about this.
I don't know. Of course I didn't, but you sound like my parents right now asking me to help with their Wi-Fi printer.
So I opened an account on Gemini, and you can only, first of all, this is weird. You can only deposit $500, I think, unless you wire money. So I deposited $500. Then I wanted to transfer my ETH. I bought some Ethereum. I wanted to transfer it over to PartyDAO to connect my MetaMask wallet, but it takes like 3 or 4 days to transfer the funds or whatever. So now my money's stuck at Gemini. Packy's probably gonna have this thing funded before I can get in, but I found a workaround. Went on Coinbase, took a picture of me, my ID, my whatever. They had to re-verify me.
So exhausting.
It's dude. It's so.
You know what this sounds like? The traditional finance system.
It's so annoying. No, but this is, well, whatever. But anyhow, if you have a
Think
Google
about all the hoops you had to
Authenticator,
jump through for this for $500.
if you have any authenticator and you're getting a new phone, make sure that you back it up somehow, or you have your secret, your seed code, which I obviously did not have.
What's the solution?
So my Coinbase, I got re-verified. I had to send them my license. Honestly, that process was not too difficult.
See, crypto is totally disrupting the traditional finance system. See, think about how easy that was.
Well, Coinbase is TradFi. Come on, but it was more. It definitely was a nuisance.
So are you a partial owner of this thing now?
Not yet, but let's see what's going on.
So you own like 17 pixels?
That's funny.
Right?
They're looking to raise, I don't know, 35 Ethereum, and they're at 25. So I don't know if I'm going to make it in time, but I'm trying. Packy, I'm trying. All right. Mario Gabriel. I don't know if that's how you pronounce his last name, but he did a 3-part profile on
If you pronounce someone's name wrong, we're going to get an email about it because people love telling you pronounce a name wrong.
Well, apparently I keep pronouncing. So now I have his first name right. It's Denis, but his last name is not Villanueva. It's Villeneuve, or I don't know, whatever.
Every week we get a new rush of emails, people saying you can't pronounce this director's name.
All right. So he did a 3-part profile on Sam Bankman-Fried and FTX. And there's some amazing things going on with this company. I just want to shout out a few data points. Ben, interrupt me. Their market cap. So the company is 26 months old.
This company completely came out of nowhere. I remember the first podcast I heard him do, I had never heard of FTX before.
That was Odd Lots 2 months ago?
This was probably like 6 or 8 months ago, but still, that was the first time I ever heard of them. And they are, their name is on the new Miami Heat stadium in
So
South Florida.
they signed a 19-year lease for $135 million. They also, if you're a baseball fan, you're probably not, but if you are, they are on the back of the umpire jerseys now.
Jeez. So his story was he was working for a traditional hedge fund trading shop and decided, I want to give away a ton of money. So to do that, I have to get really rich. And he figured crypto was the space to make that happen. And it sounds like they have one of the best trading platforms of any of them. And they are doing some really innovative stuff too.
All right, so their valuation went from 0 to 18 billion in under 3 years. For comparison, Slack was 3.8 at that time in 3 years. Square was 1 billion. Stripe was 500 million. Coinbase was 400 million. Obviously, Coinbase was earlier, but still. All right, they have 6 engineers. I forget how many employees they have, but I did the math. Their market cap, and whatever, this might be screwy, but their market cap is $219 million per person. $219 million per person. Facebook, which is $1 trillion and operates lean, not like they used to, but Facebook is $17 million per person. Again,
wasn't it you who wrote the piece a few years ago? It said like when U.S. Steel was the biggest company in 1900, it was like $3,000 per employee or something ridiculous.
Yeah, I wrote that a long time ago. Yeah. So $219 million per person versus Facebook is $17 million per person. So they bought like who did they buy? They bought some, I think it's a virtual gaming, like a sports gaming company, like e-gaming. So in the third piece, this is what he wrote. FTX is perhaps the only exchange that might be willing to experiment with tokenized contracts and could do them justice. By the way, on FTX, you could buy like the tokenized stocks. You can't buy it in the US, but globally
where they
you can.
trade 24/7, right?
Yes. What it would look like for thousands of fans to have invested in Luka Doncic's Supermax extension, perhaps fronting the money in exchange for upside, how much status, perhaps the NFTs, could be granted to these investors, and once a sufficient market was established, could such positions be traded like any other asset? Can you imagine that? You buy a piece of an athlete's contract, give them the money up front, and then that contract becomes tradable for the next contract? That's where this is going.
Okay. So I would short like half the guys on the Pistons probably, right? Because I know they're terrible. Like the Lions, Jared Goff, I'd short him immediately.
Yeah, but the market is smart. You probably get shit outs for that because Jared Goff sucks. Short Cade Cunningham.
No, he had like 8 threes in his first summer league game. I'm all on board.
So anyway, 3-part explanation or piece, primer, whatever. I thought it was really good. We'll link to that.
Do you think that the whole we've talked about this before, that the 24/7 stock trading, will like the SEC ever allow that here? I feel like that's a non-starter for a long time. I feel like you're gonna have to go trade through Singapore or Hong Kong for that. I don't think they're gonna let it happen here.
I think eventually they'll cave. But it could be like 10 years from now.
I mean, can you imagine being the intern at a Wall Street firm that has to watch this stuff 24/7 and being the person who gets like the 6 p.m. to 6 a.m. shift or something because you're watching these marks 24/7?
You know what's come full circle? The U.S. Google searches for inflation. Huge spike, huge crash.
Already?
Yep. Look at this chart.
Oh, wow. So it's already over. I keep seeing it. Which one does your wife watch? Good Morning America?
Yeah.
My wife watches Today Show, so same thing, right?
Every day, besides for today's, obviously, the awful news out of Afghanistan, but every day it's a Delta variant. It's the same thing every day. And
But
like,
I
don't need to get my Delta variant news from Michael Strahan. Sorry.
The other one, so they start with that. They hit you with the bad news with the Delta stuff, and then they have a story about someone dying, and then I've seen a few inflation pieces, and then they do an awkward transition to the weather person who's really happy, right? It's like death, dying, wildfires, climate change, and bad joke to the weather person. All right, James Montier had a long piece on GMO that, frankly, I didn't read the whole thing, but it was really long, and he was basically saying, this is kind of summing it up. He was saying, like, inflation is this cumulative process that involves a feedback loop between prices and costs. He's saying labor costs are particularly important in the production process, and thus a sustained inflation requires wages to rise significantly faster than productivity. Without a radical shift in labor's bargaining power, for which we see no sign, it is unlikely that inflation will be able to embed itself in the system. I feel like you are seeing signs of this, though. I slightly tend to disagree. By the way, James Montier, click on this piece. What's he wearing? What kind of shirt is he wearing?
He looks just like you, actually. Or you look just like him. An orange red Hawaiian shirt.
I guess maybe is the thought that if it's just happening on the lower end of the income scale, it's not going to manifest as much. But because I feel like we are seeing some signs of labor having some power. Or do you think that power is just, this is a one-time shot in the arm kind of deal? We're bumping it up in certain areas, and then that growth is going to slow. Is that kind of the idea?
I think the wage pressures that we're seeing are very targeted in COVID-related areas.
True. Hospitality.
Leisure, hospitality, service, fast food, things like that.
Maybe that's it. It does. I mean, maybe it's just because we pay so much attention to this anecdote stuff, but it does seem like that has shifted somewhat. So he's basically saying, like, listen, until I actually see something, like, I'm not going to overreact about this inflation stuff until we actually see something. And he was also saying to all the people who say, well, all this money flooded in, of course it has to lead to inflation. And he's saying, listen, if the economy falls off a cliff and then all this money comes in, that can basically just keep you stable. It doesn't have to mean inflation has to take off. It could just mean we've stabilized things and prices aren't going to rise as much. Inflation
is very weird. We don't know what causes it. We don't know how to measure it. We don't necessarily know what the impact of it.
I thought we determined how to measure it. That one index that says it's 12% a year. Yeah, it's Chapwood.
I mean, it is a tricky thing.
Yes, for sure. I mean, yeah, think about it. The Fed was trying to get inflation higher for 11 years and couldn't do it. And then we have a pandemic and the government sends money and then it all of a sudden ticks up.
It is funny though, because money printer go burr. Was that like inflation related? But the money printer was going burr and they still weren't getting elevated inflation.
If I would have had a blog in 2008, I would have sounded like a moron, probably predicting inflation because of the Fed printing so much money, and been totally wrong years later. Because at that time, that was like what you learned in economic textbooks. If interest rates go lower and the Fed starts stimulating, you're going to get inflation.
I don't fault anybody, by the way, for playing that card pre all the QEs and the twists and all those sort of things. Like, yes. I definitely would have thought that inflation was coming.
Yeah, but I fault them for sticking with it for so long, and then trying to say people aren't measuring it right and like moving the goalposts.
At one point in time, do you think you would have been like, all right, I was wrong? I want to say like 2014, 2015.
I was going to say 2013-ish. I started reading Joe Weisenthal and Colin Roche, and they were like schooling me on, no, this QE stuff is not what you think at all. It's like an asset and a liability matching off. Yeah, but if you were going into the economy.
If you were saying that monetary supply was going to create inflation, you clearly would have taken issue with Joe and Colin and others for at least 12 months. You would have said those people are idiots before you came around.
Oh, if you were one of those people? Yeah. The thing is, I didn't know enough either way, so I feel like I was learning with them. But so here's the other inflation one that I don't know if we should be shocked or not that this happened so fast, but lumber is down, 70, 75%. Bloomberg had this piece. Almost half of lumber dealers and manufacturers reported excess inventories last month. A sharp turnaround from a few months ago when suppliers ran so low they sparked price surges.
So what happened? Supply caught up, obviously, because it's not demand didn't cool off.
Right. It all of a sudden just happened, and they probably started pushing through it. But it seemed like at the time the prices were high, and everyone said, okay, these bottlenecks are here for a long, long time. and it didn't. But these are the kind of things that will seem so obvious in hindsight with things like used cars and like this is the kind of right. If you're not paying attention, this is when it really makes sense to understand this stuff and understand the underlying impacts of these numbers, right? Like the context is so required for these to understand these things.
So now it says there was an article in Bloomberg. Almost half of U.S. dealers and manufacturers have had excess supply inventory. Unbelievable.
Yeah. If you rewind this podcast 3 minutes, I said that same thing. By the way, usually I'm the one who does that. So kudos to you.
Well, listen, it happens to the best of us. I apologize.
When we were in New York,
I'm a big man. I don't like when you do it to me, and I assume you don't like when I do it to you. I apologize. That was rude.
I think it's funny because when I did that to you when we were taping in New York, you had the biggest smile on your face because you couldn't wait to dunk on me for doing it.
Well, in person, that's impressive.
Yes, I was. You were sitting across from the table from me, and I completely ignored you. I was looking ahead to the next thing.
This is an interesting chart. It's not really a crime per se, but it's a chart of U.S. college tuition and fees with a year-over-year price change. And this chart has been going down only because it is from such a high level. You know what I mean? So it's one of those weird things where...
So this is like a disinflationary. It's still going up, but at a lower rate.
Right. So the price of college last year rose only 0.2%, which is basically the lowest ever. And so on the one hand, you have prices going up and up and up and up, but the pace at which the prices are increasing are going down.
Okay. So maybe a good thing. So, okay. So I have a labor/materials supply story that shows this stuff is still going on. So our dryer crapped out on us last week. I think I've made the dad joke that we probably have put easy 200,000 miles in our dryer. There is not a day that goes by with 3 kids that we don't have at least one load of wash going, right? And once I reach Michael Batnick status, I'm going to have someone come fold it for me and put it away. Sorry, last one of those, I swear. But so it crapped out. My wife was like, "We need a new dryer. You have to there's a place we got it from right by my office." So I go there, I take a look, I go, "Here, this is this Electrolux white. This is the one we need right here." And the guy's like, "All right, let me take a look." And he goes, "Those are like 3 months back order. You're gonna have to wait a minimum 3 months for it." And I'm like,
"So what are you supposed to do? Put the clothes in the microwave?"
So he's like, "We could try to send a service team member out there, but last week 2 of our technicians quit, and you basically won't even be able to get our service people on the phone. They're so backed up."
So what are you doing?
So I'm like, "Okay, I guess I get another model." He's like, "Well, we have the same brand of dryer you're looking for in a different color. The one you have is white. Here's this one in titanium. It's $100 more." I'm like, "Okay, we need a dryer." I'm like, "I don't care if they don't match. This is, So I ended up getting it, and I was talking to him as he's filling out my order. I'm like, "What are you doing for people who, like, let's say you're building a new house?" Because I've heard some horror stories. What do you tell people?
Channel checks.
Yes, I'm doing my own channel. The funny thing is, I'm doing this all the time now. I got a used car last week too because my car is getting fixed, and I did the same thing. They were, low on their inventory, but the guy said, "We are telling people you have to come in a minimum of 6 months early before your house is going to be done to order appliances, just to make sure they're going to be there when your house is done." And that's just for normal appliances, a GE or a KitchenAid or something. If you're getting one of these crazy Sub-Zero built-in things, he's like, it could be 12 to 18 months until you get it still. He's like, obviously the supply issue is a problem, but he's like, we're also seeing just insane demand still.
So what are you supposed to do if your dryer craps out? Like, seriously?
I don't. We bought it. Luckily, we bought one and they were able to, I got it on Friday. It's going to be there by Tuesday because they had it in stock. But it was basically like, here's the things we have in stock. And the guy wasn't even trying to sell me. He was actually being straight with me. He's like, just pick something we have in stock. That's honestly your best bet.
No, it's interesting. I'm pivoting, by the way. We have about 6 million fewer jobs than we did pre-pandemic, but the level of economic output is the same or higher.
All right. I have a productivity thing for you. So I listened to your compound. Who did you have on last Friday?
Allison Schrager and Sam.
Allison Schrager. And you guys were talking about productivity, and you said how people need to, like, the remote work stuff, like there's so many people that still need to go into the office. And I agree with that. Here's the counter argument to that. How many people hate their coworkers or are annoyed by them? That's got to be a large, like, when you talk to friends about work, They're not talking about how lovely their work environment is. They're talking about the people that annoy them. So the work from home thing is got to be wonderful for those people because they don't have to be annoyed all the time.
It's amazing, but your friends are 40. I'm talking about the younger people that are not settled in their career that need to advance.
True, but the people who are already at the this is me being an elitist maybe. But the people who are already in their late 30s and early 40s or 50s and are maybe more established in their jobs, they have more responsibility and can probably push through more productivity than the young people. Is that
True.
fair?
Oh, did you see that email about that guy calling us elitists?
Yes,
All
I
right.
did.
All right. So here's my take. Basically, the TLDR is this guy thinks we're entertaining, but our blind spots are massive. And we talk in basis of fact about social safety net issues. And he was giving us anecdotes about how completely uninformed we are. And my first thought was like, what a dick. It was just not a nice email. They could have been like, hey, like your stuff, like, but here, it was just the tone was not nice, which I didn't really care for. But
And it was like 7 paragraph bullet points.
yeah, I thought a lot of his points were fair. Like he gave us a lot of examples of how certain families are subsidized, but once you cross a certain threshold and the games that people play, yeah, I don't have a ton of poor families in my life. So I can't I don't know where all the money is going. But I think what annoyed me was, again, the tone. But do we speak in basis of fact? I'm not making policy. I'm making a podcast. I'm not pounding the table. We're just talking. And
Yeah. It was, you're going to get that every once in a while. I moved on pretty quickly.
Same, as you can tell.
So there was this piece in the Vanity Fair talking about, let me see the headline here. Rich people of the Hamptons have a new headache, even richer people. And it talked about how the rich people who have lived there are now not very happy because there's even richer people living in there. It was like totally complaining about how, so this one person said, I'm a 1%er, but I bear no resemblance to these people. And they're talking about how these hedge fund people are having all this work done and they're trying to figure out how much it costs. This gets back to that thing we talked about a few weeks ago where...
Oh, I made that point. It's
just all relative.
Like I think the point I made was people that make, call it $500,000 a year have way more in common. Actually, no, I'm sorry. The point that I made was there's a bigger gap. Okay, I'm wrong. I got this backwards. There's a bigger gap between the $500,000 and 50,000 there is between the $500,000 and $1 billion. But clearly there is a big gap between rich and rich.
Yes. So 1%er versus a 0.01%.
I mean, yeah, there's a big gap. That's a Chris Rock thing. The difference between like Shaq versus the guy that signs his checks.
Yes. But it's just funny to me that this is just such a huge... So we talked about Ramit's I Will Teach You to Be Rich podcast a few weeks ago. And I think before we'd even listened to it because he was on Tim Ferriss.
Best new podcast, by the way.
It's really good. I've listened to probably 4 or 5 episodes. How many have there been? But he's giving money stories with couples that these people make $200,000, $300,000, $400,000 a year. Like these people make really good livings, no matter where you are. They make a lot of money, and they still have all these money issues. Some of them are cheap, some of them spend too much, and it's all psychological, right? All the issues. And this is the same thing if you're in the Hamptons, and like this person has been in the Hamptons since 1991. Like they probably have a beautiful place, on the water. And they're still not happy because they see someone a little richer than them coming in and doing things a little differently. It's just that mindset. It's so hard to get that psychology right of no matter what place you are in life.
You know what really nailed the rich people suck? Or I don't want to, that's too broad. Nailed the sucky rich people. Not all rich people suck, but there are sucky rich people. Oh man, how great was that? The end. No spoilers, but.
So that is a new genre, and I talked to you and Josh about this on Slack. So think about it. Rich white people are secretly unhappy and terrible human beings in some cases. So Succession, White Lotus, Big Little Lies. I'm sure there's another one I'm missing.
I never saw that one.
Why is that type of genre so satisfying?
It's so satisfying because nobody feels sympathy towards those characters. And speaking of White Lotus, how the music was sensational.
Yeah, I think Armand is one of my favorite characters of the past few years. That guy just cracked me up, everything he did. We won't spoil the ending, but what did you think of the way it wrapped up? It was
fantastic. I can't believe
that's not the kind of show you're going to be blown away by, but I thought they landed the plane perfectly.
But they tied every knot, they closed every loop. They nailed it. It was fantastic.
And season 2 is coming with a different cast in a different place.
Yeah, I can't wait. All right. Sticking with this, Jake at Economic tweeted, you are 25-year-old, interested in a career in investment management. A genie appears offering you one of the following. Which do you think best improves your career prospects? CFA designation, LOL. MBA from top tier school, great first job, rich parent. And I voted rich parent, and I don't even think it was really close.
I did too.
But great first job won.
Yeah, and honestly, maybe MBA from a top tier school kind of meshes together with rich parent, because a lot of times it's really rich people who get into the best schools, Harvard and Yale and such. Yeah, I personally know people from college, and it was kind of like, how did they get that job that was so competitive? Oh, their dad knew someone. Like, it's the rich parents.
That's everything. Yeah, that's everything. I don't even think we need to go much into this. I feel like that's everything.
And getting a great first job is very hard as a 25-year-old. I agree. A rich parent, hands down, unfortunately. That's kind of the way the world works.
Here was a delightful email in contrast to the lousy one. And again, listen, I get what you're saying, but geez, be nice. Be a little nice. Don't be a jerk. All right. Somebody emailed us. Blockchain and title insurance. I am in commercial real estate and can see this so clearly. I feel as though blockchain was invented for title insurance. That's what I've been saying. Blockchain equals public ledger equals title insurance equals a ledger of a property's title history. Blockchain is coming for title companies.
I feel like you have to find a company that's doing this and invest in them. Like, even if it goes to zero, like, this is your crusade.
You know what
the title insurance.
You know what the irony has been? That I've been on a crusade against title insurance. I've paid it 3 times in the last 2.5 years.
In New York, you're paying your $12 Bud Light for that because it's
what a racket. Unbelievable.
By the way, I think we can talk about this later for another date, because I got a few questions on it. But I followed you, and I'm going from a 15-year to a 30-year. So we'll talk about that another time. But I'm starting the refinance process.
Okay, by this time next week, I will have a blog post outlining it. So yeah, we could talk about this.
And if I'm like you, I'm going to close on that refinancing in 12 to 15 months.
If you just you'll be, by the time March rolls around, you should be done. All right, MBA purchase applications. Now, oh man, I should have known this. Does this include refis? I don't think so.
I'm not sure.
Okay, well this is down bigly. So I don't know exactly what this says about the housing market, but
I guess rates went up for a little bit. Maybe that has something to do with it.
According to this chart, it's cooling off a little bit.
Okay, here's a good one from Matt Iglesias. Housing supply fact. In June, builders finished more new units than we saw in any month between February 2008 and February 2019. So basically,
hallelujah.
So it's finally happening a little bit. Yeah, which we need more of, obviously. Okay, this is from MarketWatch. 3 largest cities in the U.S., New York, L.A., and Chicago, all had population decreases from 2019 to 2020. They're not huge. We're talking 0.5% to 1%, but in cities that big, that's a decent amount of people.
If you had to leave Grand Rapids and go anywhere right now, where would you go?
Probably somewhere nice, warm. Like people leaving California and stuff now, I'd probably go there. I don't know. I don't know. I feel like in 50 years...
Ever the contrarian, Ben.
Well, in 50 years, when when California is underwater and New York City is a big tidal wave coming, like day after tomorrow, everyone's going to want to come to the Great Lakes. So maybe I should just buy a bunch of houses here because everyone's going to come to the Great Lakes if and when we get a climate change thing. But don't you think again, these declines in these big cities aren't enormous. But isn't there on the margin... Some people lived in big cities because they had no other options, and now there are options available.
Yes.
And this sort of trickle of people away from these cities will continue.
Yes. State Street just pulled out of New York City.
Oh, really?
Yes.
Okay. Where'd they go? Austin?
No, they just closed it. I think they have offices in New Jersey and Connecticut, I think, but their downtown presence, or they're not even downtown. Their New York presence is being vacated.
Here's a survey. The IRS began sending out monthly child tax credit payments of $250 to $300 to about 35 million eligible families on July 15th. I think that's $250 to $300 per child. Payments are continued through December. They did a survey before and after the credit was sent out. In a span of just 6 weeks, it showed the credit coincided with a quick drop in food insufficiency and a drop in those who say they have difficulty paying weekly expenses. Basically, what happened is people found it easier to eat and make their expenses by sending out money. I think this is probably the problem with a lot of policy in the government is that it sounds good on the surface, but doesn't really get down to trickle down to help the right people. Money can actually solve a lot of problems for a lot of people. I think that's what we're learning here in the last 12, 15, 18 months, right? Like, even if the people who complain that it goes in the wrong hands and there's certain people who deserve it more, certain people who deserve it less, money can fix a lot of problems for people. And the stuff like the gains we've seen in terms of people in poverty having a little more breathing room, I think is pretty good.
All right, Ben, last week we spoke about Zillow's stock and why is it getting killed? Zillow's down 55%. The stock looks like crap. That's not the only stock, Ben, that looks like crap in a good market. Spotify, for example, is down 48% from its high in
Preaching
February.
to the choir here. I am a shareholder of Spotify.
So, yeah, I mean, the stock looks like junk. We hopped onto the Quarter app. Again, that's QUARTR, to listen to the quarterly report. And a few things I want to highlight. Revenue is up 23% year over year, 9% quarter over quarter. So fast growing businesses, as we've been saying forever, I'm not saying we nailed it, but of course, stocks can get killed even if the underlying business is still very strong. So why did they sell off after earnings, even after being down, call it 40% going into earnings or maybe more? Well, because they missed guidance. Their monthly active users came in light. It was up 22% year over year to 365 million, but it was below guidance. And the big takeaway for me, listening to Daniel Ek, and I forget who else, I think it was the CFO on the call, they said that Spotify is shifting from a premium subscription service to an audio platform.
Right. They're going to try to take over podcasting. That's essentially what it sounded like, right?
And all audio. So live audio, the green room.
Yeah. I'm still a believer because I'm a believer in this space. You know what I think they need to do to right the ship is they need to make another big splash purchase of a podcast. Daniel Ek, come on, make it happen. Michael and I will sell for 26 times EBITDA. Or the trailing 3 months.
So the stock did remarkably well last year when they announced the Joe Rogan signing, and I think Obama has a podcast, and I forget who else. But
to your point,
stock was on fire last year.
Stocks getting ahead of themselves and the growth not being able to. It almost wouldn't have mattered what the numbers were, right? It would have had to have been astronomical growth for it to continue to rise that much.
So not all stocks are doing well. Airbnb is getting killed, another business that I'm quite bullish on. Zillow we mentioned last week. So maybe we'll start doing more of these little segments of stocks that are getting killed in a decent market.
Yes. And again, my favorite part of the Quarter app is skipping over all the jargon number stuff right to the Q&A.
I don't even understand why they still have to do, that just must be a formality because they're just reading.
Yes. I think Animal Spirits should have a recommendations button. Anytime someone wants to hear our recommendations, boom, right to the Rex. Should we do that now?
That would be nice. No,
like
we're
the transition?
Not going to do it. Listen to the whole thing.